In 2001, Capitec Bank entered a highly competitive South African banking landscape dominated by long-established giants. The new entrant wasn't just another financial institution. It aimed to redefine banking for millions of South Africans who were either underserved or unbanked. Welcome to Mzansi Best Brands. Capitec was formed in 1997 through the acquisition of micro-lending businesses such as SmartFin and FinAid by the founding entity, PSG, an independent financial services group. It then registered them as a bank in 2001. Founded by a group of visionary entrepreneurs led by Michiel Leroux, Capitec's founders had a simple yet bold mission: to provide accessible, affordable and simplified banking solutions to all ordinary South Africans. At the time, the traditional banking system was seen as rigid and inaccessible to many. Capitec removed the fiberglass security screens that typically separated bank tellers from customers, allowing for better and more personal service. When the bank went public in February 2002, by the following year, its shares were worth little more than R1, or about 7 US cents. The stock is now trading at R1,440 or $98, an increase of more than 144,000%. The Johannesburg Stock Exchange All-Share Index is up 424% over the same period. Capitec launched with a focus on customer centricity, offering transactional accounts with no frills, a transparent fee structure, and an innovative approach to service. The founders broke traditional barriers by opening branches in underserved areas, simplifying banking processes, and introducing an efficient, tech-driven model. Capitec Bank focused on loaning money to low-income South Africans ignored by bigger banks. It extended credit to people who didn't have collateral, such as a home, to secure a loan. While critics say Capitec helped fuel a rise in risky loans, its business has thrived. It took less than 2 decades for the lender to overtake overly confident rivals and amass more customers than any other bank in South Africa. Within their first year, Capitec had opened 250 branches across South Africa, a clear indication of their focus on accessibility. The bank's use of technology was a game changer. They introduced paperless banking and real-time transactions long before it became industry standard, positioning themselves as a leader in tech-driven services. Capitec's founders cut their teeth selling wine and spirits, working for companies that would later merge to become Distel, Africa's biggest alcoholic drinks maker. Believing the 4 big South African banks made things unnecessarily complicated and expensive for clients, they decided to found a lender with branches that felt more. In 2005, Capitec reportedly had the lowest cash withdrawal fee of R1.80 at its ATMs, while one of the big 4 banks was charging a fee of R9.65 for withdrawing R500. But it was not just about fees. In 2005, Capitec was paying an interest rate of 10% on deposits of up to R25,000, well in excess of what the larger banks were offering at the time. The Solidarity Research Institute found that Capitec had the lowest bank charges of all South African banks in the years 2010, 2011, and 2012. Our vision was to eliminate the complexity of banking. We wanted to give customers control over their finances, providing them with real-time information and transparent pricing. The future, we believed, was in technology and simplicity. When we debuted our bank account product, we took a novel approach. Instead of creating premium accounts for some customers, we gave everyone the same account with the same gold card. A gamble in a country where bank cards are status symbols. Capitec still offers just one account, even as wealthier people flock to the lender to save money on bank charges. Capitec's growth was rapid and unprecedented. By 2010, Capitec had over 3 million active clients. This growth was fueled by their focus on affordability and convenience, providing accessible credit options and an easily understandable fee structure that set them apart from traditional banks. At the heart of Capitec's success was its innovative approach to branding and marketing. A ruthless focus on keeping costs low has paid off. Capitec has delivered much faster profit growth than its competitors, with earnings increasing by double-digit percentages for each of the past 15 years. A conservative approach to provisioning for bad debts helped Capitec weather a crisis among small banks around the time of its launch, as well as the 2014 collapse of its largest rival, African Bank. Unlike traditional banks, Capitec marketed itself as simplified banking, appealing to a broad spectrum of South Africans looking for affordable banking solutions. The brand's messaging focused on financial empowerment and ease of use, positioning itself as a people-first bank. Capitec made banking accessible not just physically but emotionally, breaking down the intimidating image of traditional banking. The low-cost base is also a product of Capitec's innovative culture and approach to problem-solving. As a practical example, it was the norm at the other banks that each branch would include its own back office, a team of non-client-facing staff doing settlements, compliance, accounting, etc. Capitec has adopted a revolutionary strategy by opening branches with no back offices and instead performed these functions centrally. This has allowed it to have smaller branches and thereby save on rental costs, while also avoiding the usual duplication of costs at each branch. Centralizing the back office function had the additional benefit of giving them a real-time, holistic view of what was happening across all branches, enabling them to adjust their risk appetite and pricing accordingly as conditions changed. To date, the bank has 14,451 employees. Capitec's commitment to innovation didn't stop there. As the digital era surged, the bank invested heavily in mobile banking, offering an app that allowed clients to manage their finances on the go. Over the years, Capitec became known for its first-to-market innovations, like allowing clients to open accounts using just their smartphones and offering real-time credit scoring at ATMs. By 2024, Capitec had 20 million clients, with a significant percentage using digital banking services. For 2024, Capitec has partnered with Easy Equities to give clients access to convenient, affordable investing through the banking app. More than 70,000 clients registered for the Easy Equities widget on the banking app in just 4 months. Today, Capitec stands as the second largest retail bank in South Africa, with a market share of over 30%. It has won numerous awards, including the Best Bank in South Africa several times, and its NPS score consistently ranks among the highest, reflecting strong customer satisfaction. Capitec's first slogan was "The Way to Bank," but it could just as well have been "The Way to Build a Bank," given its phenomenal success. Capitec has grown to over 8 billion rands in annual profits and a market capitalization of 237 billion rands, the third largest of the JSE-listed banks. This is astounding, considering that it was founded more than a century after its main competitors. Capitec Bank's journey is a testament to how a focus on simplicity, innovation, and customer centricity can transform an entire industry. What started as a small bank focused on accessibility has grown into a financial powerhouse, changing the way South Africans interact with their money. Banks, the physical structures, teletransactions, and handmade payment may not yet be obsolete, but the weight of Capitec leaning over the edge seems to be pulling down all the other legacy banks off their high wall. Join us next time when we take a sneak preview of the entrance of TymeBank into the fray. Stay tuned for our next episode, where we'll uncover more South African brands making their mark. Time will tell.